Welcome back, everybody, to another episode of Blockchain Buzz. I am joined by Dominic Ryder, CEO of vEmpire DDAO. Dom, how are you doing today?
I'm very good, thank you. Thanks for having me as always.
Absolutely. It's great to have you on here. Obviously, you're a guest on my show quite a bit, but this is going to be a different type of interview. We're going to understand a little bit about you, why you decided to start your project, and you started at a great time, and maybe give some advice for some future developers in the crypto space, some experience, some good times, some bad times. We're going to hear from the developer himself, so I'm excited to get into it.
Good stuff, yeah. Plenty to tell. I can talk about the bad times forever, as you know.
There have been a lot, and that's why it's going to be interesting. But I think before we get into that, it's good to understand your background a little bit, because you're not just a normal dev that's just coming from a business background and going into the crypto space like a lot of developers. You actually have a history in finance. So let's talk about that. When did you get started in finance, and what was your experience there?
I know a dev who actually thinks he knows a little bit about economics. It's mad with all of the blow-ups that you see with everybody doing it so badly. But yeah, I mean, I didn't have a traditional route into like finance. That I didn't go to university or college, as you call it in America. So I came out of what is the equivalent of I don't know if it's high. I don't know if it counts as high school or not. But well, I came out at 18 after finishing what our college is, which is like a little bit before university. And then I was on a gap year before actually joining. I was going to go to University of Bristol, which is a good university in the UK, like one of the top 10. And then I started as a stockbroker in this period in London, and it was a commission-only sales role. So it was very full-on 250 calls a day. If you didn't call, you didn't get clients. If you didn't get clients, you didn't earn any money. So it was very much thrown in at the deep end. But my personality is very much like that, as in the intensity, the pressure is where I thrive. And I very much found that out at that point. So after doing the sales roles, I started trading, and I was ended up running the trading desk and becoming a senior derivatives trader at the firm. So derivatives is like futures, options, that sort of thing. After that, I moved across to a company called St. James's Place Wealth Management, which is FTSE 100. So rather than like the Dow 30, like or like the Nasdaq 100, but it's top 100 public companies in the UK. I was associate partner there, and then after that, I moved into VC. So I always describe this route as a transition to the metaverse, in that our VC company didn't invest into like, well, it did a little bit of like tech and like, you know, the fancy stuff that everybody loves to talk about, but we focus predominantly on properties and asset-backed businesses. So where we had something that we could use to provide security against the actual cash that we invested, which is the closest link I could say to how I got into sort of metaverse and gaming investments, is the fact that these do have, you know, albeit virtual properties, an actual property or an asset behind the token. So there is, you would hope, some sort of level of security, just like how you would have from investing into like a hotel, for example.
Absolutely. And I think it's important to start there, because a lot of the devs that are launching now, they have no experience in crypto. They have no experience in finance. They have no experience in how to build a business. So that's why I like your project. You're fully doxed. You're transparent. You're doing a lot of great things during this bear market, which we're going to talk about, but it's like you have a knowledge in finance and money. So I think that's very, very important. So how did you go from working in the stock markets and working in London to then going full time and starting your own crypto project? I believe it was in what, July or August of 2021?
Yeah, so the token launched end of August. So 31st of August, we had the sale at 8 p.m. here in the UK, and then sold out 720 Ethereum raise.
Wow.
6 minutes.
And what was the price back then in July? Was it like 4K?
So it was about 2.6, because this was, July of, so not this past July, but July before 2021. So yeah, the actual sale price of VEMP at the time was 125,000 VEMP per Ethereum. So whereas the USD value now, So at that time, that was like 2 cents and 7 parts. But obviously, Ethereum was much higher. So we're still about 3 times our launch price from the actual period. But in USD values, we're around the same. But that's only because Ether's now dropped a lot as well. So yeah, I started working on vEmpire whilst I was still at my old VC, and then it got to the stage where I was doing very little work at my actual VC job. And this is why I actually agree somewhat when Elon Musk is saying that nobody's going to work from home from like Twitter and stuff like that, or Tesla, because I know for a fact that I was like doing other stuff. So I haven't really got a leg to stand on. So maybe it's just me, and everyone else is being sensible. But yeah, that was a time when I was trying to put this together. I didn't really know. I had like a small trading group that I was on Telegram with, and this was mostly stocks, but there was some crypto. And one of the guys in there worked for he used to work for Glencore, which is like a commodities broker in the US. And he then left that to start up a company called Stake Capital, which is owned by Julian Boutaloop, who's Curve developer, Stake DAO developer, one of the like original like DeFi OGs. He, in fact, invented the Flashbot, as in like Flashbots didn't exist. He was the first person to actually do a Flashbot transaction. So wow, that's sort of that old school. But yeah, his COO of the CEO Stake Capital that he was in this group. So through this guy, I started trading more into the DeFi side of things, which got me the knowledge base of like, because originally when you start out, everyone is Binance, exchanges, etc. You don't have the crossover of like staking, APR, yield, like LP tokens, all of that stuff. So that was what got me the additional knowledge to, I guess, like at least have a good way of like knowing about wallets, buying on like a DEX, etc. That got me the gap between basic crypto to actually a bit deeper, I would say. So that's the closest contact I had, I guess. And I pitched them the original concept a while ago, but as in like before I fully went out with it, which was good to get like some notes, but yeah, it looked very, very different, like the eventual product to what we discussed back then. I think I still have like the original white paper knocking about that I made sure to save for one day. Yeah. Put it on the wall or something. Who knows?
Yeah, I would love to see that. And we're going to talk about the product, but I agree. When I was working at Zendesk, we worked from home, and I would probably get on there and work an hour or two a day, do my stuff, and then I would stream and make videos all day. So look, if I was working for Elon Musk at Twitter or Tesla, I probably wouldn't want to be in the office all day. But as a CEO, it makes sense to get people in there. Now, for people that are at home, they don't know about Vemp. Give us the elevator pitch. What exactly is Vemp and vEmpire?
So you've probably heard this a million times now as well, the actual elevator pitch. But essentially, we are a layer 2 metaverse and gaming protocol. We do have our own games, which we have on platform as well as in the Sandbox Alpha season, which we are currently. We don't have our own metaverse, but we have metaverse token staking pools. Staking pools make us a little bit of DeFi. So we're not metaverse, we're not gaming, we're not DeFi, but we are all free. We are built on top of and provide users with exposure to all of those. Users can stake their mana from Decentraland or Sand from Sandbox, alongside lots of others, onto the platform. We will then pay a yield in our token Vemp for doing so as a primary yield. And then the sand that is staked, in this example, is used to purchase assets in those metaverses. We then monetize those, or if it's a game like Axie, we'll have scholars who play the game, and we then redistribute a secondary yield in the actual token state. So as a user, you're earning both Vemp as well as mana or sand or ETH. So That way, you're always able to compound your yield by the VEMP that you earn can be staked into our DAO to earn VEMP interest on that VEMP interest. Any secondary yield of Mana or Sand or ETH, you can then compound that onto the platform to earn VEMP and ETH interest on your ETH, and it just goes in a circle. So the whole economy of the platform is designed to keep assets into the protocol and always sort of exponentially turning and earning.
Absolutely. Compound Vemp. And I'm pretty sure you guys have been called the grayscale of the metaverse, which is a incredible name here. Now, on top of all that, you mentioned you have parts in the DeFi, metaverse, and gaming. I don't know the exact terminology, but you also have an NFT vault, if you will, right? Where you hold a certain number of assets on your balance sheet, which is actually, I believe, when you guys did your quarterly earning report, which we love that you do, and I'll actually pull it up here in a second because it's very professional, was about 4 times your market cap, or it was something like that. Explain it for us, your asset sheet toward versus your market cap ratio.
Yeah, so we wanted to make sure that there was what I found coming into sort of crypto from the traditional finance world is that not a lot of valuations make sense. In the traditional space, you look at a business and you look at a stock that you want to buy, for example, and you look at well, a lot of people will just ape even in the stock market, but as an analyst, what you're supposed to look at is like cash flow, order book, balance sheets, assets held by the business, stuff like that. And then what you're looking for is either a stock that is overpriced compared to the market or underpriced. And if it's underpriced, you buy it because you think it's going to go up to its market value. If it's overpriced, you can short that because you think it's way overvalued. But with crypto, obviously, you have such an immature market that, tokens that are just pure code with no actual value or utility like Doge are worth billions. But then you have, real DeFi protocols with, crazy utility like Aave or even like Stake DAO, which I mentioned before, which are sort of ignored. And the reason why is because they don't do any sort of marketing. So it's only like maxis who actually know about them, even though they've got way more utility than the standard protocol. So this mismatch means that you can still earn and benefit from other people's incorrect pricing. Just like with a stock where you're looking for something that's incorrectly priced by the market, you can look at our asset report and we tally everything up there, and you can see that our assets are worth like 3 or 4 times our market cap. And that's not for any reason other than, people seem to have this idea that price means something, which is completely false. Like, price is just how much a buyer will pay a seller for something, and that is all that it is. Like, it's why, if Putin decides to start dropping nukes, you will find that, a lot of these NFTs, which people will say forever, and I agree with, have value. The reason they have value is because of X, Y, Z, certain rarity, etc. But if you get to a stage where, things are escalating like that, they will eventually go down to their value of JPEGs, because in that environment, people don't want them. And it's just like if somebody is starving, they'll pay you thousands for, a £1 pasta pot. It's the exact same thing. Like, price is only ever dictated by a free market. And because of crypto being immature, you are able to take advantage of the fact that our book value is so much higher than our market cap. You can see the assets we own both in the report, also on chain, and you can use that to your advantage because price is only controlled by humans and it's emotional, and it can be wrong, but assets can't be wrong. They are valued correctly at the time, and there's no sort of disputing that. But the actual price of tokens is completely controlled by, you know, the fact that speculators have left the market, people eyes come back onto stuff when you're having those green candles, etc. So that's the real value, is that if you're able to be reasonable in a non-reasonable world, you can just sit back and, you know, use your logic. But especially in this market, it's not really a problem that people are selling now. You know, if you look at our price, we've sort of held on to this price floor that we've had of for a while of like 2 cents. So we've been going between 2 and 4 for a while, but people are very impatient in this current market, and they are looking for the next thing very, very quickly. So that's sort of more what we're finding in the market now as a problem. It's not that they're sellers, like the people who've left crypto have gone now. Now the struggle is keeping the community happy, and, you know, making sure that they are still utilizing the platform effectively, because there's so many like shiny new marketing, like people who've just raised will have a lot more like cash. So that's where having real utility does matter, because eventually you're not going to be able to control everything by marketing.
Absolutely. And I just want to show your financial report, because I don't feel like a lot of tokens are doing this in the crypto space. A 35-page financial report with the forward. And I'm guessing you got a lot of this from your previous job. They probably did this at your last company. Introductions. It looks professional. An executive summary, Q1 to Q2 2022. You talk about your staking pools. I'm going to fast forward down to your actual asset sheet, just so people can get an idea of how undervalued, I guess we could say, your project is at this time. And I don't want to say undervalued in a negative way, but just in terms of your total assets, which is $11.42 million, right? In terms of your NFTs, your USDC, your ApeCoin, your ETH. You can see here $3 million in ETH. And I'll zoom in for the people that are watching this at home. $3 million in ETH, $1 million in Sand, $500,000 in BNB, $500,000 in Starl, $135,000 in USDC, $1 million in ApeCoin. You know, it's insane. So your current assets, right? Your total assets is 11 million. And then your current market cap for Vemp is 4.69 million. So yeah, almost 3 times, a little around 3 times is your total asset. So obviously you run this project, but if you were an investor, what would that mean to you to see the company's assets at close to 12 million and the market cap being around 4.5?
Well, that's why I say that there's a distinction between price and you know, actual value, because price isn't dictated by the fact that we have all of those assets. That is the element that is a fact, and you cannot dispute. If you look at those prices, obviously from the date we publish the report, stuff moves about. Some might have gone higher, some might have gone lower, but at the exact time, everything in there is verified. So that is what is factual. And then what cannot be controlled and what is dictated by the market is people buying and selling. And they don't necessarily do that based on facts. They do that based on getting sold a dream, on getting like bored, stopping waiting around. Like there's so many factors that go into it, but that should always be looked at as, you know, someone else's loss. You know, some people are after, you know, crazy, you know, flipping stuff every like 24 hours, you know, buying something that just launched at like 5K market cap, getting out after at like 100K. And then that's seen as like, some people actually see like 100K market cap as late. It's crazy, like what goes on at the moment. I act like I don't enjoy a little bit of that sort of degen every now and again, which I've got a soft spot in my heart, as you know, but I think that there is a element of that. But it's like building any sort of like portfolio, you know, whether you're a fund manager or just like a degen or just normal crypto investor, there is nothing wrong with having a certain percentage of your assets, of your wealth for, you know, the fun stuff where you know full well that you are, you know, sort of going 0 to 100. Like it's like 100x or VUG. And if somebody wants to do that, that's completely fine. If they want to do like that, obviously, you know, I'm well, I was a financial advisor, but I'm not anymore. So if people want to do that, that's great. But yeah, people need to, in my opinion, have, their long-term, mid-term holds, the stuff that they know has value. Because eventually, as much as we all, might love that like 5% degen pot, eventually the crypto market will mature, and the people who are doing the cash flow and balance sheet analysis in the normal stock market will eventually move over to the crypto market. And when they do, then they'll be looking at the sensible things and not going to be looking at the 5K market cap and flipping it for 100K. So as it progresses, now is the time in between the next cycle and the next bull run where you can use this to your advantage. You can look at what are the projects with long-term vision, cash flow, assets, and who will be here for the next bull run. And if you find those that are undervalued, then you should be building your mid and long-term bag. Obviously, if something goes up by 100%, it doesn't mean you can't, take a bit of profit on the run up. But now is definitely the time that you can pick up some absolute bargains, because eventually those analysts who look at sensible things will start looking at the market. And when they do, they're not going to be looking at the small stuff that like the degens are looking at. They'll be looking for the, small mid caps where you can see factual value compared to, what is just price and emotion.
Absolutely. And that's why I always say I invest in people. It's like you've proven compared to other developers in the space, like you're working, you're a real person, you're a professional, you're building it professionally. And I think that's why it's so bullish to look at your project. Now let's get into the good stuff. I don't really know that many developers. I've always said I'll never be a developer because I see the type of hate you guys get, the type of love. When the token goes up, you're the most loved man in the world. When the token goes down, it literally flips in a matter of seconds and everybody's pointing fingers. Like, what is it like being a developer and especially experiencing the highs of the highs? I guarantee when you guys hit your all-time high, and I'm looking at the chart here, on November 21st, you were the most loved man in the world. And then as soon as the price corrects, because the market goes down, that hate, that love turns into hate and dev, do something. What's going on? What has it been like to be a developer? But you can be honest with us here. What has it been like to be a developer in the crypto space in 2021 and 2022?
To be honest, I would say that I'd definitely be lying if I'd said that the good elements did outweigh the bad. Like, honestly, it's super, super annoying, to be honest. Like, I can see how, if you're not, I mean, I'm lucky in the fact that, as I said, I used to do 250 phone calls a day, and I have a very thick skin for rejection from working that cold calls and having people whenever you cold call anyone, you get a certain percentage who will give you lots of grief. Obviously in crypto, it's the majority who give you lots of grief. It's not like the small amount of people. So, I mean, yeah, I can't imagine what it's like for somebody who, is sensitive, that you cannot be sensitive and be a developer because you'll get eaten alive. Like, honestly, like the good times, the problem is that when everything's going up, people are only happy if they got in lower, and then people buy into green candles. And so even if we'd find even if we went up 1,000% in 2 weeks, if we pulled back by 5%, we would start getting the grief. And then you can say we've just gone up 1,000% in 7 days, and now we drop back by 5, and it does not compute to anyone because they always think, and it's crazy the conspiracies that people will come up with. Honestly, people just any time you send a token from your wallet, you're dumping. People don't understand how market making works. If these people who buy and sell on exchanges, people think it's this market where it's amazingly liquid and just every buy and sell is automatically filled and there's a buyer for a seller every single time. And it's like, no, it does not work like that. Most of these exchanges that aren't in the top 10 will have very little organic volume. And so you need to have market makers on there who can fill the order book, buy and sell, keep the spreads tight so that when somebody does use that exchange, they are getting a decent price, because otherwise the price swings, and you can see it because if you look, you can tell if market making is being done, because if it's not, then it goes all rectangular. You know how chart without liquidity, it's rather than doing like this,
Yeah,
it will just go like this.
Yeah. Yep. You've seen it.
And people don't realize that. So how do you make sure the spread stays thin and that the charts look good? It's by sending tether and tokens and doing little buys and sells to make sure that the chart actually looks attractive, so that people will be wanting to trade it, because nobody wants to trade a chart that's going like this and is so sporadic and where the spread is 50% and you buy and it moves the price up by like 100, and people don't understand any of that. They just see you sending tokens. And what is so disheartening is the fact that even when we got to 65 cents, our fully diluted market cap was like 600 million, over $500 million. And I barely sold a cent. And if I ever did, it would be through market makers. But again, I was telling them to not do it. It was the first bull run, and I thought, oh, it's the community. They'll always be there. They'll always, be respectful. Everyone will understand. But I didn't realize just how quickly it turns. And so where I could have, built much more of like a sort of a pot for when the bear market hits, because I was trying to protect everybody. I didn't even use the market making bots to sell without price impact. I just didn't sell at all. I didn't want to raise the supply in the market. So that is like, you do everything in your power to try and help people and to grow your community's wallets, and to do everything to basically to pump their bags, like everything in your power. If you're a good developer, that's what you're doing. You're not selling, you're promoting, you're trying to bring everybody up with you. But honestly, sometimes it's like, why do I bother? Or why does anyone bother? And that's why I can see sometimes that that a lot of people will get into this sort of business, and they'll leave, just like Andre Cronje did, who was built Yearn, single-handedly built Phantom up, and he just left. And because it does not matter what you do or how much you do, honestly, it's you get so much abuse. It's really, really hard. If I could go back and everything would be the same, but would I be doxed or undoxed? Definitely would not show my face, because honestly, it's like the same accounts have been just setting up new accounts, taking every time the old one taken down, just giving you abuse. It's like, why? What concerns me is where were these people when they needed to shield their bag on the way up? And that's the problem with showing your face as well. And what I find is, if you show your face, people have somebody to abdicate responsibility to, which is why I think Cult DAO is so successful, because there is no central figure. Everybody has to take responsibility for their own marketing. They are the marketing team. But where you have a face, a CMO, a CEO, then you can say, well, that's their job. And that way, there's less responsibility on them, and there's more on the team, which is why we're trying to separate and make sure that they are different entities. The DAO is separate to sort of vEmpire as a company, because that's one thing that I definitely learned to focus on, is building community, how important community is, because your price is only green for so long, and if you don't have any sort of community loyalty, you're going to lose out very, very quickly.
Sounds like you've learned a lot. It sounds like it's been a pretty interesting and wild road for you, and it's good to hear from a developer because not a lot of people experience it, right? Like we're just investing, and that's why I say I'll never be a developer, because I see the type of stuff that goes on behind the scenes and the type of messages that you guys get. And let's just be realistic. Every chart looks very similar to vEmpire, right? Every chart hit an all-time high in November, and every chart's down about 90-95%. It's not on the developers. It's not. Like, it's the crypto market. Every chart is down. One thing I like about what you guys are doing is that you're building during the bear market. You guys have constantly put out updates, but I don't believe you've put out as much as you probably can. Am I right about that? Is there some things you're kind of holding back, or maybe exchanges you're waiting to get listed on? Because let's just say you got listed on Coinbase or Binance, top exchanges. It probably wouldn't do as much now as it would have done in November 2021. Is that true? Or you're still building. You got on Sandbox, Alpha Game, you're still doing great stuff, but you're probably not building at full speed because of the state of the market.
Yeah, well, I mean, we're still building at full speed, but the announcements on we're not quick to push those builds forward. For example, we've been ready to bridge to Solana for ages. The contracts are built, the token is built, but there is no point really, because at the moment the chain is suffering. There's not a lot of activity on Solana. There is some, but there's not as much as there was. We're speaking to Star Atlas, who are a Metaverse on that chain. We've got a staking pool ready to go with them. They're ready to go in terms of getting them onto the Bull CEO show and having a chat with Michael Wagner on there. But we can do that when the market is bullish, and it will have twice the impact.
Maybe more. More.
A lot more. I mean, what I'm seeing at the moment is that, just everything just doesn't have the same impact. And the problem is that because every token looks the same, like you just said, every token is down. If people have averaged in and the conditions aren't great, the temptation to pull the trigger on the growth from 2 cents to 4 cents, where in the bull run, I know it sounds, well, to some it sounds odd, only 100%, but in the bull run, you would not want to be taking every 100% that you get. You would be holding that for more. But the temptation to take your money and run when the candles are there, very, very, very tempting compared to the bull run. So that's why, even though we are pushing stuff out, there's just it will be better for the business and better for holders if we hold the stuff back. And what is good and what people don't realize is the fact that people say, well, don't just push it out now. Why would you wait? And those people are the ones who will sell and leave. The people who are pushing for you to put out stuff that will just impact price, they're the ones who are going to be selling the pump. The ones who aren't telling us to put it out, they're the ones who will benefit from when we put that marketing out. And so why would we want to just provide exit liquidity for people? We want to help our actual community. And if they're just there for a quick, 2x, then they're not our priority. Our priority is long-term holders, long-term community members.
Absolutely. Yeah. In the bear market, it's like you're seeing that now. It's like a 2x, a 3x, a 4x is insane. Whereas in the bull market, there were tokens that were 1,000xing, 100xing all the time. So it's just a different time now. But I think we're seeing that with a lot of developers. We had Kyle Chassé on the show, and he was like, yeah, what's the point in, we're building now, but what's the point in releasing these updates? Like, it's not going to do anything for the price. It's like, we're kind of building during the bear market. That's usually who thrives during the bull. Now, back to the developer side, because I always find this interesting. Let's say someone's watching this that wants to start a token. What advice could you give them on whether it's timing to launch it now, to wait, how to do it correctly, to dox or undox? Like, I guess if you could do it differently, what would you tell yourself if you're sitting here in November 2022? What would you tell yourself? How would you do it differently?
So, I mean, there's always going to be different situations. I mean, for example, vEmpire, we launched with, well, the plan was originally to not take any VC funding, but then we became like an incubated launch on Unicrypt, and they introduced us to MEXC Global, which the exchange obviously, and then the exchange wanted to invest, and so we took like a couple $100,000 of private funding, which obviously a couple $100,000 is great money to to everyday people on the street, but in the bull run when a project is launching, that's not like a lot of private investment, even though it seems like it might be. People raise like 10 million privately, or hundreds of millions privately. So I would say that to get your priority straight in terms of private fundraising first, because I came from a background, like I said, where as a VC, we would invest into asset-backed properties. And if the business went badly, we would take the property. That is the safety net that it provided. But obviously, it is quite brutal in reality, because you are seizing the asset of somebody if the business doesn't go well. So I think that muddied my view on VCs. Like, some VCs are good. They'll support you, introduce you. Some of them obviously will just dump on you incessantly. But if you are able to get backed by good VCs who, diamond-handed VCs with big names, they can connect you so well. So where we only got a small amount, we were effectively launching, just like any like Unicrypt protocol. So we had to battle a lot, which meant that whereas, it's like Vitalik doesn't get why dump on his tweets, like neither do like, all of these top tokens. The founders don't get that because for some reason it's like they feel like they don't have control after you get to a certain bit. So launching Doxed without big VC names behind you, which separate you from retail, can be difficult. So I would say if you do decide to not show your face, you'll need to KYC with an auditing company like Assure DeFi or Solid Proof, get your contracts audited and go that route. But if your idea is good enough that you can get private funding, certainly get it. As long as you vest your VCs, I would say that most of them are fairly decent, and they can be very helpful. So if I could go back, I would either do one of those two things differently. I would either be doxed with a good amount of private investors who could have connected me to the exchanges a lot earlier, or I would launch undoxed completely things. But because I was in that middle ground, I sort of had the troubles of both. But it's good because it means that I've experienced the troubles of both. So it's definitely been useful, especially for like the protocols I advise now. I've had the full spectrum of good and bad, but it's definitely been glad of the way that it's all turned out, obviously. But certainly had its fair share of troubles. But that's sort of the recommendation I would give, is decide early on if you want to launch, as something that is doxed or undoxed. And if you do want to be doxed, then I'd probably go down the route of getting proper VC support for your token, because otherwise, if you're launching doxed into an undoxed environment, it's pretty brutal.
Definitely. And what are your thoughts on that? You mentioned it because it's like I see all the time. You'll see developers selling tokens and in the DeFi space, and people go crazy, right? They're calling them out. You're dumping on our heads. You're dumping. Vitalik sells tokens. I think he sold recently like almost $100 million worth of tokens. No one says anything. Maybe. Yeah, it was more. And in the traditional world, I was working at Zendesk. I think every 3 months, our CEO sold like $13 million worth of stock. No one says anything. People celebrate it. Why is there a discrepancy towards traditional world, these larger market cap projects, and then the DeFi projects, the smaller market cap projects that are selling. It's like it's frowned upon. Like, why do you think that is?
Yeah, it's crazy how like it's like people should just like develop and do all of this for free. I mean, there's certain ways to go about it, which is like I said, if you've got even a small budget, like my market makers, I'm on like, KuCoin, Huobi, like we do market making on like 5, 6, 7 exchanges. Plus we've got like 10 others who we don't do the MM for. The exchange will do it themselves. But like they cost like 7K a month, 7K USD a month, plus they take like 1% of any like trading or sales. And if you are a half decent protocol, you will be able to afford that. And that's also being listed on like 6, 7 exchanges. If you're just on one, I think they charge 2K. And they can, if needed, sell tokens with no price impact using high frequency trading bots on an exchange. So I don't see any problem with that whatsoever. The only time where I see it as a problem if devs sell is if they're selling directly into the DEX liquidity, because exchanges are they're there to keep pace with that liquidity pot. That is the one that they use and the one that they track, and any dumps into that, obviously if that price reduces, all the others reduce in turn with it. So as long as you're not actually selling into the DEX liquidity, then send it to market makers on exchanges. I mean, there's a certain like argument that you can sell a bit into the DEX, but if you're not, if you don't have tax and you're not on exchanges, then obviously what can you do? But yeah, I mean, usually there's a better option, but again, if it's done sensibly and it's not hurting the on a run or like anything like that, then obviously people need to be a bit more lenient with the fact that people also need to make money. People seem to think that like at the beginning stages of a token, if the developer doesn't make money, they can't develop. Clues in the name, but people don't seem to notice that that at the beginning, obviously everyone wants to be fully decentralized in the end, but at that time, there is somebody trying to push that project forward, and if they cannot afford to push it forward anymore, then it doesn't matter. Like then you'll be saying, well, you should have liquidated tokens to support yourself. But yeah, I think there is a fine line. If you're on exchanges, then no excuse to dump into DEX liquidity because you can use market makers. If you're not, then if you have tax, no excuse again. If you don't, then there's some there. But yeah, people should be much more considerate that there is usually a business and a person who needs to sustain themselves to keep it going for them.
So it goes both ways. People need to be more considerate, and developers, stop selling on Uniswap. If you're on an exchange, go sell there so it doesn't have an impact on liquidity and doesn't have a huge impact on the price as well. Now, final question for you regarding your token, vEmpire. What can we expect? Obviously, you guys just got listed on Alpha, the Sandbox Alpha game, which is alongside Deadmau5, Bored Ape Yacht Club, other huge figures. What else should we expect here for vEmpire? What other things can we look out for this year and heading into 2023?
Cool. This year, not long left for this year. We have like tons of big partnerships and more that we're working on with some very, very famous people. Like people, if I said like people wouldn't believe me, they'd think I was lying. With some of the people that we're speaking to, as in these are like in real life celebrities outside of crypto, like celebrities who we are discussing things with, not from a marketing standpoint, but from like we are a known name now in gaming, in the metaverse, and so people come to us as experts in the field because we obviously have such transparent reports that everyone can read. We have such a wide variety of like metaverses and games and NFTs we invest in, we have that experience. And so, you know, the people that we're speaking to and providing advice to and potentially building for are like next level. As well as that, we're always talking to new exchanges. Now that we've got like 2 tier ones ticked off, would love to get us onto some of the, you know, the big ones, well, the bigger ones. But yeah, there's huge things going on in the background, which are being saved for the time where they will have that impact. So for those who are in it for the long term, stake your VEMP to earn some more. And then, yeah, eventually it will be time to announce those. And yeah, the people who are in it for the long term, I am very committed to making it very good for those. If you're just in it for like a quick price impact, then yeah, not the right protocol for you, because we're building very much onto the long term. And when it runs, it will go. But we're not interested in the quick pump and dump.
No, it's a long-term project. We saw how high it went previously. We've seen you build, and just look at the utility, the use case, the assets, everything you guys are doing is incredible. And the community is still strong as ever. So that's the show. I appreciate you coming on, sharing little insights into what it's like to be a developer, insights into how to get started, how you would recommend getting started, and also sharing some information on vEmpire DAO. Make sure to check them out online at v-empire.io with the CEO of vEmpire DAO, Dominic Ryder. Dom, we appreciate you joining us here on the Blockchain Buzz. We will be back with another episode next Thursday at 1 p.m. Eastern Standard Time. So make sure to subscribe to Gokhshtein Media. Make sure to follow at Dom Ryder on Twitter, and we will see you guys next week. Thanks so much. See you soon.
Thanks so much.